Lowe's is in the spotlight today after it reported first quarter results. The results came, of course, after Home Depot did a day earlier. There's a live look at Lowe's stock trading in New York down by 0.5 percentage point. One of the big talking points is the decline in same-store sales of 1.7%. That was, however, a more modest decline in same-store sales than the street had expected. Let's go to an expert for commentary on the stocks. Max Rakhlenko is managing director of Hardlines Retail with TD Cowen in New York. Max, thanks a lot for joining us. I've read your note on the results. You say you're impressed with the beat on revenue, sales, and the beat on profit at Lowe's. Why don't we start there?
Great. Yeah, thanks a lot for having me on. 1Q was better than feared. Comps, same-store sales down 1.7%, certainly beat our expectations. And the quarter sort of progressed quite similar to what we saw at Home Depot yesterday. We started with February being impacted by bad weather, and then trends really continued to improve over March and April, and then May, it sounds like, is off to a nice start as well. So certainly it does feel like, excluding weather, it's a little bit more of the same from what we've seen over the past couple of quarters, where the homeowner is there, but they're there for the smaller projects, while the bigger, more discretionary projects is where we've seen the bigger pullback.
So same-store sales declined by less than expected. That's good news, but not as good as positive same-store sales growth. Is there visibility to positive same-store sales growth?
Q2 should be better, at least the way that management is guiding. But unfortunately, there is still sort of lack of visibility into the second half of the year, as that's when tariffs really should start to get going. So seems like things are going to get better, and then we'll have to take a wait-and-see approach for the second half.
How important are the pro sales at both of these companies, Lowe's and Home Depot? Those are sales to professional contractors. How important a part of the sales and profit mix are they?
Lowe's has done a really nice job with their pro segment. It was up mid-single digit this quarter. The last couple, it was up high singles. This quarter was impacted by bad weather, as pros couldn't work on some of those outdoor projects. But the pro category remains a really nice bright spot for Lowe's, while at the same time it's really been DIY that's softer. We're estimating DIY might have been down about 4% in 1Q. That was almost offset by pro, but still Lowe's does have more exposure to DIY, so that's why they're getting hit a little bit more disproportionately.
You also say in your note that a key question you have, and perhaps other analysts and investors as well, is how Lowe's manages through the tariff situation. I guess you're referring to the possibility that it may raise some prices on higher input costs. Is that correct?
Yes, that's right. And Lowe's left their comments relatively vague. They really focus on just making sure that they're not losing market share, making sure that they're priced appropriately versus some of their peers. So it seems like they're taking a little bit more of a wait-and-see approach. But at the same time, they did reiterate the full-year guidance, including both top and bottom line, so suggesting that they certainly don't see a gross margin headwind and that they have enough offsets to be able to handle tariffs.
Remind us what Home Depot said on that topic yesterday.
So Home Depot yesterday really spoke to wanting to maintain prices as much as they can. It's basically speaking to keeping prices steady and then being able to figure out various offsets as well as sourcing efficiencies. So that way margins don't get hit either.
Do you think these companies are feeling at least indirect pressure from the White House after the U.S. president told Walmart to eat the tariffs?
I think that there is certainly a level of positioning that each company is taking. I think that as each company reports, we're really going to see a large sort of multitude of different ways of approaching it. Some are going to take the Walmart approach, while others, I think, are going to look to stay a little bit more under the radar.
Okay, you've got a hold rating on these shares and a price target of $245 US per share. What would it take for you to move to buy on this stock?
Yeah, for us, it really comes down to two things. One is, can Lowe's start to improve that DIY segment that's been down for a number of quarters now? And then second, can they continue to maintain momentum in the pro segment? So For Lowe's, their DIY category is much bigger than Pro. So it's really, hey, can we find a trough and then potentially start to bounce off of that?
You appear to prefer Home Depot shares at this juncture. You've got a buy rating on those shares and a price target of 470. What causes you to prefer Home Depot in terms of value right now?
Yeah, so we prefer Home Depot's channel mix with Pro and DIY split essentially 50-50 between the two, which we think better positions the company versus compared to Lowe's. Just because longer term, we think that Pro segment is going to continue to structurally outperform DIY. And then additionally, we're quite bullish on Home Depot's acquisition of SRS. While we're still in quite the early innings, it does feel like it's really bearing fruit, and management's investments are starting to pay off.
Lower interest rates in the U.S. would be a major tailwind for both companies. So would you agree? And are you pricing in the expectation of lower rates in 2025?
Lower rates would be a major tailwind, but I think that it'd be a tailwind in two ways. One is it would support a pickup in existing home sales, and then secondarily, it'll support greater equity extraction. Now, what's interesting is that we've actually seen HELOC rates essentially at 2-year lows now, while the 30-year mortgage does remain quite elevated, sort of, around that 7% mark. So ultimately, lower rates are going to help both sides of the business. And we think that the greater equity extraction should theoretically help Home Depot more than it helps Lowe's, just given that Home Depot is more focused on those bigger projects.
Max, thank you very much for joining us today with your insights. That's Max Rakhlenko, Managing Director of Hardlines Retail and Wellness at TD Cowen. He joined us from New York.